The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 1st magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a great day. Hope you had a great weekend. Let's make sure we have an extraordinary day. And the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here. I am. But most importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, let those fingers do the walking. You can always send me an email, steve@tfnn.com, and inside the subject heading, please put radio show question. Of course, inside the Tiger's Den, hey, any ping will do. So let's go ahead and get this show started on magnificent, marvelous, magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow 207 points. 26,666 was on my screen. Sounds a little devilish. The S&P's up 14 at 29.28. NASDAQ 100 up about 4/10, a little over 0.4%. Trade down at 76.60. Russell 2000 is struggling today, down nearly 0.8%. That's up 13 points. 1683 is her print. Semis are up 10. Otherwise, we are green across the board. Spot volatility index well below the 50-day. I don't know if it's well below, but it is below the 50-day exponential moving average. That means plenty of liquidity in the marketplace. Gold is off $3. Silver down 19 cents. Light sweet crude is up $1.63. That's a little over 2% to the upside. Leading the charge dollar-wise, the upside. We're talking about Tesla and Tilray. They're up $45 and $27 respectively. Booking holdings up 21. Amazon up 16, Euronet worldwide up 13, NVIDIA up about 10. To the downside, it is Avro Bio. AVRO is the ticker symbol. 24%. To the downside, 45%. $23 to the downside, 45%. Ryanair Holdings off 16% or nearly $16. F5 Networks down 10. Sarepta Therapeutics trading out at 153. What a huge move this thing has had. It's off $8 or 5% out there. So certainly there's things that you and I can talk about. Of course, I want to talk about what you want to talk about, and that means we're going to go to our first question. This came in early this morning, about 9:15. It's from William. So William writes in and says, "Hi, Steve." Hi, William. "I'm considering a 5 to 10% holding of GDX in my long-term investment portfolio. What would be a good entry point? Thanks for all you provide us every day." So you're welcome. Now, you're going to ask me to provide you with a good entry point into GDX without asking me, is that a good idea? So maybe you're going to get a twofer. I'll try to give you the best entry point, and you're talking about long-term holding out there. So let me do this. Let's come to our 3 time frames out here. So GDX, let's go put that in the system and see what we've got here. Your best long-term would probably be, so here I will do the following. I'll give you 2 price levels to consider. One would be 1770. That's the bottom of its weekly profile. I do not know whether price will get down there, but right now what we know about the weekly profile is that price is trading right at the point of control, where both buyers and sellers are most comfortable. So we know that, William and Bill. Well, William was who wrote it, but Bill was writing. It's obviously the nickname that you're going with. So right now it's really where both buyers and sellers are most comfortable. It's a little bit hard to see, but it'll be easier to see if I go ahead and turn price off. I know you say turn price off. See that center line of the box, by the way, bullish structured box. So 1853 is a area of support, one area of support, but price has not really gotten much above that. We're trading at 1860. So it doesn't really qualify. So here, this would suggest that there's no real upside movement until price on a weekly basis could close up 1979. So if you're asking me, is today the day to buy? Probably not. Why? Well, and the daily chart out here, price is right up against resistance. That's the top of its daily time frame at 1860. So we'll pull back to 1776 would be one other price point, but that's using a daily time frame. And if you went to the monthly out here, which if you're looking as a long-term holding, maybe based on the other work you and I are going to do, I'd wait until price got down to the bottom of that box around 1628. That's the actual bottom. But I show here about 1610 or so might be a measured move of a consolidation pattern that it had traded in from a monthly standpoint since the beginning of January in 2017. Now the question is the GDX something that, and I don't know what a 5% holding of your portfolio means. You want to make sure you have the right risk parameter in there. And then I'd be asking questions with regard to your long-term portfolio. What other commodities do you have exposure to? And things of that sort, because it's really important, right? Your long-term portfolio, should you have exposure to gold is basically, if you're saying you want to go into the miners, that's in essence what you are saying. And if that's the case, then what we have to do is probably have to go. I think I tried to pull this chart up because you had sent in an email at 9:15. Right here, I think. So if we take a look at, here's gold. And, well, this is gold in all the major currencies out here. When I say major, I'm referring to U.S. dollar, euro, yen, and the pound sterling out here. And the important thing, Bill, for you to take from this is that you need price moving in the same direction in all these major currencies, either to the upside or the downside, in your case, to the upside, in order for there to be any traction. Now, this is a monthly time frame chart, so it really brings into perspective, because you were talking about your long-term portfolio, really brings into perspective, you better be in an uptrend with regard to gold. Well, gold in dollars broke through that uptrend a couple months ago. We take a look at that. This is using a simple trend line. This trend line here coming back to December 2015, then uses my next touch point, December 2016, and we can see that we closed below that in the month of August. So certainly in terms of dollars, gold has not at all confirmed any kind of uptrend, really just the opposite out there. If I take a look at what's going on with regard to gold on a long-term basis in terms of euros, same thing. Right? Broke through a trend that it should have held. It did that in July of 2018. Longer term view, as I take a look at this, there's really no signal here for your long-term portfolio to have exposure. If we take a look at yen, what is gold doing in yen? Gold broke through that trend line, its trend line, broke through this here in August, testing it last month, testing it today, and it can't be just about the yen. So we come back from this break here. What you'll see as we go into this break, hopefully you're watching us on TigerTV. Here's the GDX. Same kind of thing out there. We have to establish that gold is getting ready to take off topside for you to take a long-term portfolio view. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we're taking a look at, for Bill, the question of whether or not, well, I gave him some prices to consider for his long-term, intermediate-term portfolio with regard to GDX. But now we're doing a twofer, which means I can't just give him those numbers and then not tell him what things he really has to consider. Because as a trade, it's a whole different thing than should you be investing part of your portfolio in gold or the gold miners as we speak just yet. And I'm just going to present the information and you get to answer that. But what we do know from the long-term perspective is that the GDX is going to go higher. It has to be doing it in all major currencies. Now, we know because of the directional correlation between gold and the miners, we can just take a look at the daily time frame, which is where we're at now. And when we take a look at the daily time frame charts, we're looking at the US dollar, gold on the left-hand side, then next to it euros, then yen, and then pound sterling out here. Now, it's possible from a trade standpoint, Bill, and everybody else out there, it's possible that, Friday was the C point of an A to B equals CD to the upside in dollars. Maybe. It's not a guarantee that that really is the case out here. What gold has been doing since August 24th, when it had a sign of strength out here, certainly from a candle standpoint, it's just been trading sideways between about the 1190 area and the 1214 level. So I'm going to tell you, Bill, there's no confirmation of gold in dollars that it's ready to begin moving higher. And if you take a look at the next chart, which is gold in euros, this thing made a new low just a few days ago. There's no higher lows inside of gold priced in euros. This is saying from a long-term, you want to at least see on a daily basis a stair-step pattern of gold making higher highs and higher lows, certainly in euros, certainly in dollars, certainly in yen, which it is doing. But unless you're trading gold in yen out there, which you're not most likely, this is just a sliver of maybe, just maybe. Wednesday was the C point of an A to B equals CD to the upside, just maybe. But then go to the right side of the chart. You take a look at gold and pound sterling, again, made a new all-time low just 2 days ago. And there's no series of higher highs and higher lows. It's just the opposite. You see series of lower highs and lower lows that continue to form in it. And so I will share with you, I will say, do not position your long-term portfolio with the GDX and or gold just yet. And almost really for nearly every commodity that, well, I can't say every commodity. I mean, we really would have to do a totally thorough investigation of it. But what we can do is we can come back somewhere around here. I've got a chart that takes a look at the majority of commodities out here. Where is it? Let's see if we can find it. Is it here? Yeah. So, like, it's not every commodity, okay? This is take a look at gold, which is in the upper left. Then you've got wheat. Then you have corn. Then you got silver. Then you have rice. And you've got natural gas. And you've got crude oil. And you got soybeans. And then you've got live cattle out here. And these are mostly continuous contracts, so they're on a weekly basis. We can take a look at long-term views out here. But you don't see commodities breaking out in anything. Now, yes, light sweet crude is headed higher, but by the way, right around the $82 mark, $84 mark, depending on when it gets there, it's going to potentially run into some real stiff resistance, a descending trend line from a weekly standpoint out here. But there's no breakout going here. I would say, Bill, you're better off putting that 5 or 10% in the equity market. I'd rather see you go ahead and put that inside the Dow, because and I'm not necessarily saying today, and we'll come back and we'll take a look at why would Stevie say maybe not just necessarily today, but you're going to get more bang for your buck right now, because that is where the flow of capital is going into, and that's really what it is you want to see. If you're wondering, what do traders think of the Dow in euros, yen, and pounds, unlike what you and I looked at in gold, here it's clear and unequivocal. You're at a new all-time high today for gold in those three currencies. We didn't make a new all-time high. I don't think we did inside of the Dow. But the key level for the Dow today and tomorrow and the rest of this week is going to be 26,616.71. That's the high from January. I don't really care about the high from September. So as a Friday, as an example, I don't really care so much about that high as I'm using as our benchmark the high of January that the Dow needs to clear. Right now, it's off to a pretty good start for October out there. So I would rather see you make that as a portfolio decision, it's your long-term account. I'm convinced that the Dow is going to be much, much higher. So if timing is not your issue, then fire away now or put some in now. I think you'd be better off to wait for a week or at least wait for a couple of days. And why would I say that? And the reason I would say that is, let me put over Stevie's black box system, Bob out here. And if we take a look at Stevie's black box system for the equity futures contracts, we've got some of these topping signals out here on a daily and a weekly and a monthly time frame out here for the ES and for the NQ and even for the Dow out here. And I really want to see how these signals get taken care of. And the reason why I want to see how these signals get taken care of is because we don't have clear and convincing information that just now, today, even though it's a nice day in the markets out here, that the markets are, in fact, getting ready to blow up, not blow up, but continue that move higher. So I just want some convincing information. And I know you would say, well, what's that convincing information? Well, I saw one of our other listeners wrote in, was asking me about the New York Stock Exchange. In fact, she wrote in and she said, Steve, what do you think about the Hindenburg-Ohlmans and the New York Stock Exchange? Actually, I didn't know we were actually there. I had not been paying attention to it. But here, and we can get to that. I think I've got a stock chart on that. But let's move over to the New York Stock Exchange. One of our Denners, respected Denner, typed in a message and said, so what does it take to turn the summation index higher? And I'm going to assume that this individual is talking about the summation index for the New York Stock Exchange, which is panel 1, 2, 3, 4, 5. So the second one from the bottom, what you can see is moving lower. You can see it's red. You can see it's below zero. And I typed in, I said it would take 1,023 net advancing issues inside the New York Stock Exchange to actually turn it up. It's just a mathematical calculation. Now, if we had 1,023 net advancing issues in the New York Stock Exchange, then the oscillator reading, the advanced decline oscillator, you can see where that is because it's labeled on my chart, would get above zero. If you take a look at the advanced decline oscillator reading since September 4th, you will see that the summation index line turned red. Why did it turn red? It turned red because the oscillator reading got below zero. The difference between two exponential moving averages, 19 and 39, of the advanced decline data out here. It turns green when it's above zero, says that buyers are in control of the market. When it's below zero, sellers are in control of the market out here. So so that's what it would take to turn that up. Because we have been below zero out here, and because of the divergence of price moving higher, while the advanced decline oscillator reading has been below zero, just says you have to have a moment of pause. Now, you don't have to. I'm just suggesting that you do, because you'd like to have you'd like to have the markets provide you with synergistic messages. Is that even a sentence? But you sort of know what I mean. So I tell you what, during this breakout here, for Shelley, we're gonna Stevie will pull up his New York Stock Exchange Hindenburg Omen chart. I'll try to find it. We'll figure out what that says. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So for Shelley, who wrote in about the Hindenburg Omen, which is it's named that because, you know, bad things can happen. I haven't updated this chart for like forever. Well, I can't say the last time I updated looked like it was back in November 2017. So let me describe to you. And you'll see a bunch of little red signals out here, red arrows. Each of those red arrows on this chart here were those Hindenburg omen signals. So just because you get them, or even just because you get a cluster, it could turn into a cluster. You know what? If you just simply use this as your tool to go short, or somehow prognosticate that the market is, doing really bad things out here. But we can see there's basic 3 rules out here in order to calculate it. And others have taken this and created some type of massaging therapy to it to make the rules slightly different. But what you're looking for is inside the New York Stock Exchange, new highs and new lows to be greater than at least 45 from a daily standpoint. Now, the bottom of my screen, you can see I've got the New York Stock Exchange new highs and new lows. Those are the 2 bottom panel. I have 45 out there. So we can easily see that we've been above 45 on a daily basis pretty much since August 31st out here. There are other time periods as well, but certainly pretty clearly since August 31st or so, we've pretty much been there where the new highs and new lows are both above 45. Okay, that's one thing. You then want to go take a look at the New York Stock Exchange. You want to go back 50 days prior and see if the New York Stock Exchange is trading behind that. Well, if we go to, in essence, August 31st, and I go back 50 days, 50 trading sessions, I should say, it takes me back into the early part of July, somewhere around 12,486. So clearly we're trading above that. And then the third element that it needs is an advanced decline oscillator closing below the 0 level. That's panel number 2. And you can see we've been below that certainly since right around September the 4th. So the Hindenburg omen signals, give or take, we've been seeing those for the entire month of September. I'll make a little yellow rectangle. Pretty much it looks like ever since September 4th. Now I'd have to go back and take a look at each 50-day period, go back and figure that out. But so here, you've had the signals for a long period of time, Shelley. Whether it's going to amount to anything or not, and by the way, it stays active as long as this advanced decline oscillator reading stays below 0. And it stays active for 30 days. So back to the other question of Den, what's it going to take to turn the summation index up? Well, it's going to take 1,023 net advancing issues today. And then once it gets back above 0, it kind of negates the pattern itself out there. So I don't really, but look, it's present. What's more important, at least to Stevie here, is that advanced decline oscillator reading down below the 0 line. So we don't have that signal out there that everything is clear. And you know what else we don't really have as far as a clear signal out here is just the market breadth inside the S&P 500. We're close, but no cigar. And if we take a look at this is just simply the tool that's brought to us by our good friends over at Taz, John Logan. And as we speak right now today, from a daily standpoint in the S&P 500, there's 146 issues trading above the top of their box. When you trade above the top of the box, you're above resistance. So the interpretation should be is that it's bullish. Likewise, we can take a look at the S&P 500 and see there's 160 issues trading below the bottom of the box. Therefore, and when these two cross over, that's what you see, the green line and the red line crossing over each other. Now, it's a lagging indicator, so we'd have to see some really good signs of a bottom inside of the S&P 500 in order to say, hey, that bearish signal that you're getting here with regard to market breadth, it's lagging and it's going to change. It hasn't changed today, even in this nice positive market out here. So just have to get just a tad cautious. Now, look, that's on the daily basis. On the weekly basis, so for your intermediate term time frame out here, there's no signal whatsoever that says that there's any kind of problem in a river city out there. And with regard to the NDX 100, I happen to have that too out here. This thing is very bullish. So here's our kind of diverging markets. Again, this is a daily market breadth today. 38 issues above the top, 22 below, 43 in between support and resistance, just kind of consolidating sideways out here. So we don't have really great clear signals inside of the marketplace out there. Does that help at all? That's what's going on inside the market. But money continues to flow into the U.S., and it's going to continue to flow into the U.S. And so back to Bill, go with the flow. I know you'd like to buy a bottom, and it's possible that gold has formed that bottom. But if it has formed that bottom, we're going to see higher highs and higher lows inside the major currencies out there and on a daily basis. And until that takes place, I say don't even think about it. Do not, well, you can think about it, but maybe just don't take action. Don't do it. Don't do it. All right, let me see here. Kay had a question too. So Kay writes in, hi Steve, can you look at the 30-minute NQ? I'm short for a pullback from 77.13. See support at 76.62. What's your red line look for? So let's so Kay, let me just kind of do the NQ for you. By the way, if we take a look at the NQ, we can see that today what it has done so far is it's tested and rejected the high from August 30th in U.S. dollars. It's testing the high from September 4th in terms of euros. At this stage, you're at a new all-time high in terms of yen and in terms of pound sterling. Right now, just making a retracement out there. If we take a look at the NQ here, this is what you would be interested in, I think, would be levels of support. You were asking about my red line out there. Well, with regard to the daily level for the NQ, you're looking at 76.39. It's forming one of those RMI tops. It has not formed one. There's a big difference. So 76.39 would be a level of support if you're looking for Stevie's red line, which is green, means the price oscillator is above zero on the daily time frame. So hopefully that's a number that is helpful to you. And now what we can do is we can put on this here, I can give you the 60, 240, 300. I can give you anything you want, the daily and the weekly set of profiles. You said you were in a 30-minute time frame chart. So let's just change that to 30 minutes for you. And if you're looking for a 30-minute level of support, we don't have it out here because you're below the bottom of the box of 77.06. But on a 240-minute, and maybe it was even the 60-minute time frame. Let me turn over the 60-minute. No, it's not the 60-minute. It's the 240, the 300. You're looking at the top of those boxes. So both bars have turned orange, which means a new profile could be forming. But right now you're down at support. So you'll want to watch this level being 76.66. Yeah, I hate saying that, but we'll call it 76.86. Whew. Okay, I don't want to be giving you devilish type numbers out there. So call it 76.85 would be the number. If you see price moving and closing below that, then the support level, you've got Stevie's green line, 76.39, and you have 76.35 on both the 4-hour and 5-hour time frame charts for the NQ. Right now, the NQ is bullish. Bullish weekly, bullish daily, bullish, just flat out bullish. And we took a look at the market breadth just a few moments ago. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days. Try out this software risk-free. For more information, Profile Scanner, and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter with a focus on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Lee B writes in and says, hi, Steve. Hey, Lee. I'm curious about the IWM, so the Russell 2000. Markets are up big. Great news on the trade agreement, and the small caps are down on big volume. Do you think today is a bottom, a capitulation move? Thanks for your thoughts. So let's take a look at the Russell 2000 index, a cash index out here. Actually, what we have, we're going to do both for you. We're going to take a look at the equity futures contract. In fact, since that's up on the screen, let's take a look at it. And here what you've got, Lee, is a 60-minute, a 240-minute, a 5-hour chart, the daily chart, the weekly chart. And by the way, if today was a bottom, just to give you an example, if I put over my short-term time frame charts here, this is take a look at this. Subscribers get this each morning. So here what you're taking a look at are 31-hour, 2-hour, 5-hour time frames, as well as then we can go take a look at daily, weekly, and monthly. And if it was making a bottom, likely what you and I would see would be bottom signals, bottom confirmation signals, such as the one you've got on a 2-hour time frame for the December gold contract. You can see that in the Russell 2000, the coast is clear, not what you want to see when you're looking for a bottom. So I'm just simply going to look to this and say, you know, the Rhodes momentum indicator signals are saying, no, not really. If I look at a 30-minute time frame, my outlook is bearish. And 1-hour time frame, it says it's a bearish and it's breaking down. The same thing on a 2-hour, the same thing on a 5-hour. So there's no, other than being able to call like the bottom tick. And Lee, if you're asking me to do that, man, don't, because I can't. I can only get lucky every now and then. And we don't need to do that. So no, we're not seeing those signals here. That's what's really clear. That doesn't mean that we're not close, though. You know, and but there we're looking at a bunch of short-term time frames. We're just not seeing it. Now back to the cash industry. By the way, on a weekly time frame chart, it's the only place where price is trading within from a profile standpoint. So you know, and I don't know that it's. And the problem is that it's trading back inside the box here, Lee, and that box is bearish in structure. What do I mean by that? Again, here's the bearish. Here is the box. You can see where price is at. If I simply turn off price, which I will, here's what we see. Here's what we see. You can see that the center line at 1692 is much closer to the top of the box, 1706. So granted, we're in this range here. When you trade above that, nothing more bullish than a failed bearish pattern. Price is back down here. But this is the area where both buyers and sellers are. If price starts slipping below 1693 by a bunch, you could easily see a move down to 1627. Easily see that. Right now, we're pretty much trading right around that point of control area. So could this be it? That would be a song by who? Not the Who, certainly. Who sings that song? Is that oh, come on, you know who that is. You know, those two guys. In any event, out here, Hall & Oates, right? I think that's Hall & Oates. This is it, yeah. Or is my mind just kind of, blowing a gasket? But forget the gasket stuff. Here's what we can see about the Russell 2000. It is in wave number 7 on the way down. Now, we've been in wave number 7 for several days. 1, 2, 3, 4 days. We have been in wave number 7. Doesn't get confirmed until the following day doesn't have a lower low. We can also see that price is coming back to where it should, which is that Tom DeMark setup trend line. That is the actual low out here from the trading session of August 17th, and that level is 1680. Kenny Loggins. Thank you, Mike. It was in my mind. I just couldn't pull it off. That's a great Kenny Loggins tune. Absolutely. But the price level out here that we're looking for to hold the support would be 1680. We're at 1684. So we may be close. If we are close, or it is close out here, we're going to start to see some type of reversal signals on Stevie's black box system. They're just not there just yet for really any intraday time frame out here. So I think keep looking to see if it's going to make its next. Now, look, if it breaks through this 1680, well, then it brings back the July 30th level into play out here. So that's what I see when I take a look at the Russell 2000. I know you mentioned IWM, but I just get cleaner signals by looking at the equity futures contract in this case here as well. Well, let me just see here. I can put IWM in so I can give you what that equivalent value is. And that is actually, so its Tom DeMark setup is right here down at about 166 out here. I'm going to go with the cash indice, though, as a number to be watching for. So thanks for writing. Thanks for asking the question. I hope that my answer is fairly clear for you. Let's go see if we've got any other questions out here, because I love taking questions, whether it is by voice or whether it is by inside the Tiger's Den or wherever it might be. So I don't see anything else. So that's good. So now where do we go? What's worthwhile? What should I share with you that we haven't shared thus far? What is it? Let me see. Just kind of surf around. Tesla. I don't know why I said Tesla, but let's just go take a look at TSLA, get a feel for what it is doing. It's up 16% today, so we know that. So what Tesla, I believe, is doing here is trading right into resistance. Let's go see if that is the case. Now, one set of resistance lines being the top of a new profile. Yeah, it is. So the bounce that we've seen so far. So if you take a look at Tesla out here, and here's one thing we know by taking a look at the daily and the weekly time frame chart out here, and that is we know where resistance is at. Now, in the daily time frame, let me just turn price off here for you. So give me a second to do that. What we can see is that price bounced right up into where it should, which was the top of a brand new box, 309.52. So if Tesla is making a turn, there's momentum to the upside. It needs to close above 309.52. Now, we can go right next door to the weekly time frame chart and see resistance being the top of its box is 313.55. So Tesla will not have turned and get ready to burn until price closes over the top of that box out there, 313.55. So far, just a nice counter trend move. It can do more than that, but it needs to clear at a minimum 309.52. But I'd say since the weekly profile is at 313, that's the number that you would be working on. How about Apple? I think that was making a new all-time high or trying to make a new all-time high earlier today. You can see where its resistance level is, 229.67. The high is today's high is 229.42. 67 is probably the old all-time high out here. So we got a little bit of a tug of war between the daily profile, which today it is closed up above, and the weekly profile, which it has not been able to do. So it looks like it's going to go tag and test that 229.67. The volume, as this equity was up there on September 5th, was 33 million shares. You're at about 15 million so far today, so it doesn't look like today is going to be the day. But as long as it does not close below 225.10, there's no rejection of that swing point out there. That's what's going on in the case of Apple. So we're coming to our break. If there's another question that comes in, we'll answer it. If not, I'll figure out something. What we know so far is the GDX for your long-term portfolio, no signals out there for that. What we know about the Hindenburg omens is they're plentiful in September in the New York Stock Exchange, but we've seen where plenty of times they don't mean a hill of beans. You need 1,023 net advancing issues for the advanced decline oscillator to get above zero and then turn up the summation index. We're not there yet. So we don't have a clear and convincing breakout that's going on as 1:50 in the afternoon, believe it or not. Great.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Folks, so Dow's up 212, S&P is up 15. So we just, earlier I said we just don't have that synergistic message across the indices out here to again, believe it or not, to say that there's a breakout going on and we're ready to move up to that next level. We're certainly watching the Dow and the close above its January high, which it is above. 26,616, we're 26,675 out there. So that would be one thing. The ES Mini is the indices. So we looked at the S&P 500. We looked at the market breadth, which was bearish out here. I would feel better about suggesting that, okay, we're out of the woods, so to speak, if we could see the ES Mini close above Stevie's red line. We're trading, it's a green line right now. We're trading on it right now. So the ES Mini has a confirmed Rhodes momentum indicator top. It did that last Monday, I believe, when we had that gap to the downside. That was a falling window. And, prices just really tested that as we speak right now. So that's resistance. As well, it's trading below Stevie's green line. So it's really at about 29.34. This is really considered just a counter trend rally as we speak right now. The NQ is beginning to show this pattern, right? We looked at that earlier. If we go take a look at the NQ, you'll see it out here. Now, in the case of the ES Mini, we did have a bearish reversal signal. I don't know if we're going to have that today or not. We could have a shooting star today. We could. I'm not saying we will, but we could. Just depends on where the close is at. And if we don't get one today, we'd be watching for a bearish reversal signal tomorrow. Not saying that we're going to get one, but you do pay attention to this pattern when it shows up. And but it would also then require, two closes, one below Stevie's green line, 76.39, and then at a minimum below the top of the task profile at 75.73 to suggest that there's anything more nefarious, haven't used that word before, that could be going on. So we'll watch to see how this stuff closes at. Long term, though, don't put your money in the GDX. Put it in the U.S. stock markets. You're going to get more bang for your buck. When the GDX is ready to take off in gold and all major currencies, then we can take a look at that for your long-term portfolio, but not today. Thanks so much, folks. Stay tuned. David White's up next, 2 to 3. Tom O'Brien, 3 to 5. I'll be back with you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.